It's 0.6 higher, 11,237. That's the first trade, 70 higher on the Nifty.
11,300 nearly on the Nifty. The Bank Nifty is coming within sort of its all-time intraday highs.
We're up about 120 odd points on the Nifty.
Nifty Bank is at a record high.
Okay, what a turnaround it's been for the market.
And the market breadth ends with just 2:1, so it's come off quite a bit.
Strong global cues help Indian markets rise for the second straight day. Sensex and Nifty end at fresh 6-month highs.
The Nifty Bank leads the market rally as it hits a record high for the first time since August last year. The 2% surge is driven by HDFC Bank and ICICI Bank.
Mid-caps gain but underperform the frontliners. The index ends 0.5% in the green, dragged down by PSU banks. Real estate stocks surge. CLSA bets on a recovery in the housing sector.
Bharti Infratel loses as Bharti Airtel plans to transfer a 32% stake in the company to its subsidiary Netel Infra. The price at which the transfer will happen is about 290 rupees per share.
And HDFC Life slips 5% on stake sale announcement by Standard Life. JV partner, the JV partner will sell close to 5% stake to meet public shareholding norms. Meanwhile, SpiceJet loses 5% on fears of grounding of Boeing 737 MAX 8. Well, those were the top 5 headlines from Dalal Street on a day when the markets once again beat to bullish tunes. Hello and welcome to Bulls Charge Ahead, the show where we tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Lata, hi. Another very, very strong day. I mean, the broader market was a bit more tepid. The mid-cap index, small-cap indices came off the highs, but the Nifty sort of went on ahead with much stronger moves. Over the next 30 minutes, we will talk about what happened, the stories which mattered, and of course, we'll take your questions. We'll have our guests join in to answer those questions. Prakash Diwan is joining in today. We have Mitesh Thakkar on the charts. Gentlemen, thanks very much, Mitesh and Prakash, for joining in on the show. As always, let's take a quick look at what really happened right from the word go. Lata.
Well, I would think that this is a global liquidity surge that has lifted all boats. Let's just look back at the events of the past 3-4 months. First, we saw the Fed loosening up and then doubts being raised even on whether it will maintain the timetable of tightening its balance sheet, contracting its balance sheet. And then more recently, you had the ECB turning extremely dovish and cutting down growth forecasts. And the PMoC, the Chinese central bank, also announcing very dovish policies, kind of buttressed when Li Keqiang met the National People's Congress. So more monetary and fiscal stimuluses coming from that country. So 3 of the largest economies of the world, US, EU and China, are all speaking about stimuluses, monetary and fiscal. And global equities, risk assets are waking up to the fact that liquidity is going to be plentiful. That's explained. That probably explains how Asian indices have been rising year to date, and today all of them are above 1%. In fact, Nikkei and some others like Hang Seng are up even more, close to 2%. So Sensex and Nifty are actually following suit. To some extent, they underperformed in the month of January, and there is also a little bit of catch-up. But today, we are not really the outperformers. Other indices have done far better, including Wall Street indices like the Nasdaq. The FI flows are telling you exactly where the positives are coming from. The DIs have been selling day after day. So this is not like, oh, the elections are being called, are going to be followed by a stable government, and that's why, irrespective of what had happened in terms of our perception of elections, it looks like this rally would have come anyway, because this looks like a global liquidity wave. Nifty Bank, of course, was the best performer today, gaining almost 2% at one point in time, ending at all-time highs. More colour, stock specific?
Lata, so as I said, the broader market did a little, did not do as well as the last few days. So, I mean, just to give you an example, the small cap index high was 66.14. We ended at 65.78. So about what, 40 points off the high on the small cap index. And I mean, the mid cap index also, there was a red bar on the mid cap index by close. It was up 0.4%, but essentially the close was lower than the open.
Probably they got wind that Hardik Patel is joining Congress.
I mean, yeah, I mean, politics obviously is going to sway things around. But so the broader market a little did well, but not as well as yesterday or the day before. Okay, large caps, no problems. Bharti, a big gainer. We'll get to the story in a bit. ICICI Bank, IndusInd to me was the standout because, I mean, for actually weeks on end, IndusInd had not really done anything while the rest of the market was, the rest of the banking stocks were also doing very well. And today, IndusInd participated. It came off the highs, but still was strong. L&T, Adani Port, and Sun Pharma were some of the other large nifty gainers. iShares came off a little bit. It had seen a large gain last 2 days. Bajaj Finance came off a little bit. There was Infratel, which was about 1% lower. Now we come to the broader space. So look at this. Escorts, DLF, CG Power, and I'm only mentioning things with very large volumes. Ajanta Pharma, Adani Enterprises, PVR. There was Bombay Dyeing, Arvind, KEC. Matrimony yesterday was up 20%. Matrimony was up another 10% plus in trade today. Yeah, 17% actually. So big moves with volumes 2 days. KEI was up 9% and IIFL was up about 6% as well. In terms of losses, HDFC Life, and again, there's news there. DHFL continues to lose. Apollo Hospital was down about 4%. Indigo, SpiceJet was down. Motherson, Gru Finance, etc. were the other names which were lower in the broader market. Lata.
Matrimony.com perhaps is a seasonal stock. It must be rising during marriage season and perhaps not doing too well in inauspicious
But 40%
months.
in 2 days, Lata.
I know,
so
I mean,
that's
some rally. That's exactly what caught my eye. Okay, well, I just want to add a word on, bank index. Bank index usually tends to do well when the rupee does well. A strong rupee, higher bond, that also means lower bond yields and higher bond prices. All this is extremely bank positive, and that also explains why the bank Nifty had a sugar rush today. But where do we go from here? Especially because I think for Nifty Bank, it's blue skies terrain. Let's ask our technical expert first. Mitesh, what's the trade on the Nifty? And for me, more importantly, the Nifty Bank.
Evening, Lata. I think we've been talking about targets of 11,250, which were met today, but it doesn't show signs of slowing down. Yes, towards the end, we did see some profit booking. And typically in a strong up move, these kind of moves will lead to a day or two, maybe 3 days of consolidation. So I'm not very bearish, but a 60-70 point kind of a dip around 11,200, 220 would be a very welcome buying opportunity, and the stop loss should be below 11,175. So I think the overall direction remains on the upside, but with 2 days of strong rally behind us, maybe another 2-3 days of consolidation could be happening, and that should possibly. Once it ends, should again see continuation on the upside, and I would now look at targets close to about 11,450, 500.
Okay.
Okay, let's move on to the second story then. Nifty Bank led the market rally, hitting a record high for the first time since August last year. The index surged close to 2%. HDFC Bank, ICICI Bank, IndusInd Bank were some of the top gainers. HDFC and ICICI contributed about 80% to the Bank Nifty gains today. We got a question, Lata.
Yes, this is Aman Chauhan, who has written from Pune with a question on HDFC Bank. He says he has 350 shares of the bank purchased at 1,252 rupees a piece. He wants to know if he should hold or sell. My God, he has gold with him. He's asking if he should hold or sell. HDFC Bank, Prakash, you're dressed as a politician, by the way. Is this election season attire? I want to know. And then, of course, your views on HDFC Bank purchased at 1,252.
Yeah, so I guess when the market is all raring to go into elections, there's no way you can escape that fever.
Okay.
On a very clear move that the Nifty Bank is showing, and some of the banks being close to the 52-week highs, there's no reason why HDFC Bank will not follow suit. Lata, is my view, and a couple of reasons why it has probably got left out in the pecking order in terms of the up move that we've seen favoring the Axis and the ICAs, because of the kind of valuation that it always attracted. So it didn't lose much ground in the first place. For Mr. Chauhan, he's sitting at a level which is absolutely fail safe. So I would just ask him to hold on. He's demonstrated great faith. And I think the next move for HDFC Bank will happen as we get closer to higher levels on the Nifty, when the reset on the Nifty itself will make the twins move up. There's no complaint from HDFC Bank, except there's some numbers that you keep on hearing about which look good for the RBLs and the Yes Banks and the Kotaks of the world in some market segments. But as a package, I think it still has enough steam and enough legs to go.
Okay, actually, Mitesh, I don't think you gave us a target for the Nifty Bank. You told us about 11,400 for the Nifty. Tell us about Nifty Bank, and the next target for HDFC Bank, which you rarely use that word, has actually been a laggard.
So Nifty Bank, Lata, two things. One, it kind of broke into all-time highs with a gap up opening today. That should suggest further upsides, and 29,000 should be the next working target, though I suspect this rally could see further continuation than that. The medium-term charts do suggest targets close to about 30,000 over here. So there is significant upside left in Nifty Bank as well. Coming to HDFC Bank, I think, if you look at the last few months or two, 3 quarters of movement, I think the stock hasn't done much. It's been basically sideways between around 2,200 to about 1,950, 2,000 on the downside. I think it will head towards the upper end of the range, 2,200, 2,220. If it crosses that, we'll look at fresh targets of around 2,350. But for the timing, there's no signal. I think it just looks like 2,220 on the upside to roughly about 2,050, 2,000 on the downside.
Mitesh, IndusInd Bank, is it also beginning a move? Starting a move now?
Yeah, looks like that, Prashad. I think good breakout today. In fact, we had that as a recommendation today sometime in the evening show. Getting past this 1545, 1550 zones means that 1610 and then possibly 1650 could happen over here. So I'm quite positive from a trading point of view. Would be a buyer with a stop below 1540 over here.
Well, actually, two of you had IndusInd as a buy, right? So you got it right in the morning as well. Oro, both stocks did well. To the third headline for the day, mid-caps gained just under 0.5%, and they underperformed the frontliners. PSU banks were the main culprit, all of them ending in the red. And on the other hand, real estate stocks batted for the bulls in the mid-cap space. These stocks got a boost, probably because of a CLSA report which expects a recovery in the housing sector. That report recommended DLF. DLF, India Bulls, Realty were the stocks that topped the charts. A question?
Rajendra Kumar from Delhi has written in with a question on DLF. He's been holding 1,325 shares of the company at 175 rupees a share. He wants to know if he should hold or sell. DLF has made a very smart move. From the recent lows of 140, 145, it's around 190 rupees now. Mitesh, first to you, what would you put on DLF as targets?
So DLF actually in the last few days has gone into some kind of an uptrend. In the short term, I think I'm quite positive and looking at levels of around 195, which is now not very far away. But I think beyond that, there's a good chance that if 195 is being crossed, 210 to 215 can happen over here. Today's managed to get past the 200 average also, so I think 195 looks certain to be happening over the next 3 to 4 sessions. But I think eventually 210 to 15, that range should be a target.
All right. Prakash, what would your pick of the pack be actually, PSU banks or Realty, whichever you choose?
No, so the Realty pack, while housing seems to be making a big comeback, Lata, I think it's the commercial real estate that's going to take off in a significant way. And I think the big trigger is going to be the Embassy REIT, which is on the cards. So anybody who's got REITable properties, whether it's India Bulls, real estate, Embassy, to a large extent Century Textile, I think will be the first of the races. And then, of course, the likes of Arvind Smart Spaces, DLF, Oberoi Realty, you can't ignore these as well. My top pick out of the entire lot would be Arvind Smart Spaces, given the fact that there is a huge valuation upside that's available in the current market price as well as compared to what the promoters, for example, bought warrants at. It was about 178, if I remember correctly, that the promoters have put in money. So, a significant amount of upside which is left in some of these good names.
Okay. Well, gentlemen, do stay on. We have to take a break. We are coming back with more headlines from Dalal Street, but let's leave you with some expert opinion that we got through the day.
We've seen a very large transaction in Axis Bank. We've seen large transaction in Kotak Mahindra Bank. There are several large transactions in the offing. So once we adjust the foreign inflow number for these large block sales that have happened, the net inflow is not such a large number. The small and the mid cap indices have trailed India's large cap indices by almost about 23 to 25% over the last 12 months or so. And this is the biggest divergence between small caps and large caps that we have seen.
The Indian economic growth cycle is stronger than any political party from a long-term standpoint. But one of our hopes and expectations would be that if the current ruling party and in a coalition or on its own comes back, the government comes prepared with a stronger, clearer idea of what they want to do early after election. If you get a new coalition of a lot of different parties, we don't know how long it'll take them to formulate a cohesive strategy that can help propel some business confidence, some recovery in overall animal spirit, so to say, in the economy. And therefore, I think that would create obviously a headwind and an opportunity to buy at lower level.
The markets are not only factoring an NDA coming back to power, but I think now the markets are factoring an Indian majority, which has its own risks, as we all know. But it seems that what the markets are now factoring is that once there is a stable government at the center post the elections, which was always a concern, whichever party comes, I think the concern was whether we're going to have a stable government and a continuation of the reform agenda. I think what investors are now probably factoring in is the return of the animal spirits that will come into the market. I think the FII numbers that we have seen in a big way, I think that I don't really think that that's active investment in a big way. There could be a bit of ETF money there.
Over the last few weeks, we've been reducing a little bit some of our IT exposure. I still think pharma looks okay, but certainly IT is probably the one sector where people have been, if you like, hiding in for the last 6 to 12 months. So I think possibly that's a sector which is seeing a bit of pressure. And then obviously the financials continues to be the key sector from an Indian perspective. People are clearly been wanting to buy industrials, to sort of, I think foreigners certainly been looking for a long time for this so-called capex recovery, which has been continually delayed. So I think the high beta sectors are the ones which are clearly going at the moment.
You're with us here on Markets Today. Bulls charge ahead. We got through 3 of the top 5 stories. Our guests are with us, and we are taking the questions you send us every day. The 4th story then. Bharti Airtel was a big mover in trade today. It ended the day 5% higher. The stock rose on news that the telecom giant will cut its stake in Bharti Infratel. Bharti Airtel plans to sell 32% stake to its subsidiary Netel Infra. It's being seen as part of its deleveraging move. Rima is here with more of the details. Rima.
Well, Bharti Airtel stock is excited in trade because this is one step closer to the company monetizing its stake in Bharti Infratel. So what has happened? Bharti has transferred 32% of its Bharti Infratel stake to its wholly owned subsidiary called Netel Infra. The company said that the 60-day volume-weighted average of Bharti Infratel comes at around 290 rupees, which is roughly the price around which the Airtel stake will be transferred to Netel Infra. Remember, this 290 rupees per share is at a steep discount of, to Bharti Infratel's current market price. But Infratel was one of the best performing stocks in 2019 with a rally of more than about 20%. Now, this is an intercompany transfer. The transfer will take place around the 18th of March on or after that, but there will be no change in the debt profile of the Airtel group post this transfer. But the stock is excited is because this is one step closer to the company monetizing its stake. The monetization of Infratel's stake by Bharti will happen once Netel Infra Infra sells its stake to an external investor, which can happen only after the Indus merger is completed. So once the Nettle Infra stake, stake sale happens to an external party, the Bharti debt will come down, and the Bharti stake in Bharti Infratel will come down from 50.3% to 18.3%. So that is, about the development which has taken place. The stock, as we said, is excited because this is the precursor to the company actually monetizing its stake in Infratel, but that can only happen post the Indus merger.
Fair point. Rima, thanks a lot for that. That explained why Infratel fell, Bharti rose. Now we have a question from Swapnil Annadate. He bought 35 shares of Bharti Airtel at 464 rupees a piece, says he's a long-term investor and wants to know if he should hold or sell. Oh, not in the money. He's down by about 25%. What should he do, Prakash? A 30% kind of a up move to make money to break even seems like a challenge. I would, if I were him, I would move money out of Bharti Airtel and move into Infratel. Two reasons. Infratel is just started moving up on the basis of some recognition of very strong fundamental headwinds. The holding company discount that it always had is also likely to be diluted while it continues to be part of the group, but the holding company discount will come down, and the last trigger is when Reliance Jio goes out to the market to sell its optic fiber network assets. Bharti Infratel will start getting rated much better than where it is from a sheer equivalence perspective. So I think Bharti Airtel could probably take a little bit of a pause here, but Infratel could help him make money, so the switch would make a lot of sense at this point. Anything on the charts, Mitesh?
See, I do like Infratel. I think the long-term charts are now reversing. And my idea is that the stock, which is possibly now at about 315, is unlikely to go below 290, 295 again. While on the medium-term charts, we have targets close to about 370, 375 on the upside. So stay put around 370, I think, is where exit or profit booking can be considered.
Okay, so Bharti in focus. We move on to the fifth story of the day today. Stocks in focus. SpiceJet was under pressure today, ending the day 5% in the red. The stock slumped on fears that the Boeing 737 MAX 8, that particular model of the aircraft, would be grounded. The carrier has 13 of those particular models and has ordered 142 more. Remember, 25 airlines around the world have grounded the operations of all Boeing 737 MAX 8 aircrafts. The move comes after this aircraft suffered a second fatal crash just in the last 4 months.
Okay, HDFC Life as well slipped 5% in trade on account of a stake sale announcement. The joint venture partner Standard Life sold close to 5% of its stake to meet public shareholding rules. Abhishek Kothari explains the deal to us.
Well, Standard Life is offering, about 10 crore shares with a base option of 7 crore shares and a green shoe option of 2.95 crore shares. So the base price that they have set for this deal is about 357.5, which is at a discount of more than 8% to yesterday's closing price. So the overall stake in HDFC Life of Standard Life will actually reduce by 5% to near to about 24%. Through this stake sale, Standard Life will get about 3,560 odd crores in terms of the amount received from the stake sale. Back to you.
Okay, that was a quick explanation, but we are still out of time, Abhishek, to handle any questions. Prakash, Mitesh, thank you very much indeed for joining us. From Prashant, me and the entire team, thank you very much for watching Markets Today. Bulls charge ahead.